Aloha, everybody. Joshua Hayes at BigWaveTrading.com. I'm going to go over the overall market on a longer term time frame to keep everything in perspective here because the market, I'm seeing a lot of emotions, a lot of hardcore bulls that are pretty sure that we bottomed here based on the QQQ big cap tech stock relative strength. And bears are really loud right now, especially with all the banking issues, and are pretty sure that the next financial crisis is here. And I will say, based on my trading on Friday, it felt like that to me. Friday was a weird day to start off the day. I only gave one trade idea out, DRMA, at some point in the pre-market. Told everybody I wanted to get long DRMA over 209, which was a key critical resistance level from the daily chart, moved over to the intraday time frame. I did not expect it to cross that level back up and through it right before the open. And when it did that and pulled back, I was like, all right, man, I want to see how this thing acts, trades out the gate before I send in my order. But guys, anytime the level actually hits pre-market, I should have bought it immediately. 210, that's where I wanted to get long, limit, and or 210 buy stop, because this was not a dip and rip. A dip and rip, I normally wait for the first 2 or 3 minutes to go by, and then I either buy it near the lows, risking that low a day. So let's pretend like this would have been the lows here. If it would have like traded sideways here, you can either buy it there, risking low day, or wait till it gets above the high, which is what I like to do. So let's pretend like these were the first 3 minutes. The buy stop would go here. You'd get long per taking that 15% gain. 210 was where I wanted to enter. Unfortunately, that whole 16% move, I had to watch it rip and go without me. And that's how I started the day. And that immediately threw me on full tilt because already my decision making, everything that I decide to do, the market does the opposite. And if I decide to take this during the pre-market, with the way things are going right now, which is normal in a market like this where there's such bifurcation, it would just go ahead and fail on me. But because I don't get long, it does that. So then that takes me then to my next trade on the day. SI held VWAP, got back above the 21 EMA, and this was a key critical level at 203. Buy stop above 203. I do that right, and I partake in that 5% gain following that buy stop trigger. But guess what I decided to do? I decided to be super smart. Front run that 204 break, and I actually put my buy stop at 203. Got long at 203, and I was going to use I used the 21 EMA as my cut loss. When I got below the 21 EMA, what did I do? I stopped out. What happened? The 5% move, 5% plus move. Remember, we're always looking for at least 5%. Happened without me. Great, right? Really wonderful session so far. After DRMA, probably shouldn't have taken another trade. However, if I would have done DRMA properly, profitable trade. Had I done SI properly, profitable trade. Both times, I tried to outsmart the market, the system, the methodology, and it cost me. And then if you want to see how trading in this market can go, this is called bad luck, but in this market, it should be expected. So we're going to get rid of that. So BBIO was a new swing trade based on the daily chart. This candle is what we had the day before, and it was right above the 50 SMA. And I told everybody, one new speculative long position, BBIO. I like it, but this, my 3 indicators are not aligned. TTM trend momentum is negative. I did have max green bot for the past 5 days, and it wasn't coming directly on the 50 SMA. So I have to get long and size in, expecting that it's going to trigger, fill, and fail. That's exactly what happened, but what followed? Are you kidding me? A 35% move without me. And this is exactly how it played out. And this is trading, guys. It's not a big deal. High of the day before. Stock opens, triggers my buy stop. I'm long. I have a 3% gain. There's my final cut loss level on this trade. Yesterday's low a day. You know what happened right here, guys. Stopped out, comes back, and then what happens into the end of the day? Amazing. So much for a 35% move without me. I took a full R unit loss. Now, was it 100% of my account? 50%, 25%, 10%? No. Intraday, the biggest I am right now is 5% of my account capital. And on the end of day side, I'm the smallest I've ever been, because what I'm about to show you is still telling me it's not time yet. The best traders in the world, I'm not one of them, can make money in this market. But the vast majority of the traders that I know are losing money in this market. Traders that have never been red before are red. Traders that traded through 2000 and 2008 with me, and even traders that traded through 2000 and 2003 with me, all are in agreement. This is the tricky, most difficult market yet. And I completely agree. We've never had a downtrend with such bifurcation, constant bifurcation ever since the February 2021 highs in the IWM. So on that note, keeping that big picture perspective, Friday straight up sucked for me. BBIO sucked. DRMA sucked. SI sucked. Aww. It's pretty sad, right? Well, I got to keep telling myself, I'm extremely small, and I cut my losses. What if BBIO would have kept waterfalling and would have closed at 5? Would I be upset that it did what it did? No. DRMA, okay, that sucks. There's nothing, you know, that's just a botch job on my end. I definitely should have taken that one in the pre-market when it broke out above the high, that level. SI though, what if I wouldn't have cut my loss at the 21 EMA? It would have gone down to VWAP. I would have doubled down. It would have failed VWAP, wouldn't have believed it, and it would have retraced the entire day's move. So either way, my losses were small. I maintained discipline. I'll pat myself on the back for that. I may not be killing it or making money in this market right now, but at least I'm not losing a lot of money at all. And actually, the past week was pretty good until Friday. But Friday is what happens when you have a market like it currently is. That being said, congratulations to everyone that was profitable off DRMA in the morning. I do know people that were profitable off that trade idea that was given out before I was going to take it. And then hopefully BBIO didn't cause everybody as much pain as it caused me. So let's really quick, because that's all it's going to take, just a really quick recap. Let's take a look at what the big picture is. Reminding everybody, when we're green and when we're above the zero lines on the indicators I'm going to show, I can be aggressive with B signals. And whenever I actually get an A signal, I can be pretty damn sure it's going to work. They won't always work, but I can really size up. So just keep that in mind. Green is good, red is bad, above zero is good, below zero is bad. All right, everybody, we're going to look at Thinkorswim. This is the weekly time frame of the SPY, and I'm going to remind everybody, don't know how far back out this one goes. Nice, it goes back 2003. When we're above the zero line, good things happen on the weekly. When we're below the zero line, bad things happen. Above the zero line, good things happen. Below the zero line, bad things happen. Rinse and repeat. Rinse, repeat. Where are we at currently at the SPY? We're below the zero line on the weekly. Okay, that's all I need to know. Red means stop, green means go. QQQ, we all know how strong the QQQ has been recently. When QQQ is above the zero line, good things happen. Below the zero line, bad things happen. Above the zero, good things happen. Below the zero, bad things happen. But lately, the QQQ has been strong, but on a weekly time frame, it's a red light. It's still below the zero. So, on a longer time frame, it tells me, despite the QQQ strength in the short term, we're still early. We're not in the sweet spot yet. We're not in the sweet spot yet. Above zero, we're really good. Below zero, we should expect some more chop. So now, let's look at my monthly time segment volume indicator that has also, during my best trading performances, the ones where you can get long something and they just work without dipping harsh. Let's see how they look. By the way, everyone, I wanted to show you more weekly tickets indicators above and below the zero line, but Thinkorswim is having maintenance this weekend, so it was only allowing me to show you the SPY and QQQ. So RSP, I'm bringing this up because recently, while the SPY has actually been relatively strong, to the RSP, it's been extremely weak relative to the QQQ. That being said, on a monthly, QQQ TSV, we're still red. DIA, red. IWM, red. SPY, red. RSP, red. 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 Going towards the zero line on the RSP. QQQ, going towards the zero line. Red, red. Now they do look like they're going to curl and turn, and we got a slingshot starting here. So that is positive. But overall, am I really missing out by not being long those one or two stocks with all of my account capital and getting super lucky, which I am long ANET, by the way, but I don't have my entire account capital into it? Should I be upset that I do not? Not so much when financials look like this. So I'm going to go ahead and end the video lesson there. Hope that helps everyone. Longer term, it's still early. You're not missing out. Tough market, easier markets will come. Aloha.